Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. It's been going on, let me tell you. I am watching the news every single day. I'm looking through each and every detail I can. I'm spanning the globe. I am looking into all of that to save you time. The first thing I want to discuss today is the consumer, what's happening and what it means to you. The second thing, subprime. You remember that? Yeah. Starting to ring a bell. Third thing is recession or not. What's happening? I'm going to give you all the details. And if you're wondering what the heck is this guy talking about, I'll leave a timestamp down in the description below. Okay. And check that one out in particular. I will name it something like this is what you need to know. And that will explain everything. I will do that in here. Let's begin by taking a look at these examples. Few of them. Gas could rise above $6 per gallon by the end of the summer. For those in the United States or some areas in the United States, they're used to having relatively cheap gas. But you look at areas like Europe, for instance, and things are expensive but have gone way off into the stratosphere. Okay, and I'll show you some more examples of the UK and other parts of Europe as well. What about quotes like this? I've saw maybe 100 in just the last few days. While we anticipated a post-stimulus slowdown in these categories, this is Target, we didn't anticipate the magnitude of that shift. When we talk to our guests, they often express their concerns about a host of rapidly changing conditions, ranging from geopolitics to the high and persistent inflation that they have been experiencing. This is going on all over the place. I could read you 1,000 of these, but you get the point. Companies are coming out and saying the same thing. We did not expect this. Why? Because they said inflation was transitory and they all believed it. I'm going to show you some articles later on in this one. Stick with me. More subprime borrowers are missing loan payments. Borrowers with limited or troubled credit histories are defaulting on credit cards, car loans, and personal loans. This is big. Why? Because it's like the canary in the coal mine. Does it mean that the exact same pattern from 2007 to 2008 is going to happen again? Probably not. That's not what I'm saying, but it indicates something very important. And if you watch each and every step, you're going to get that. Okay. So I want to make it very clear. Like I said, go to that timestamp below. I haven't named it yet, but you will see what I'm talking about. I'll explain it. I have it all written down right now, just to make it really simple. Consumers with low credit scores are falling behind on payments for car loans, personal loans, and credit cards, a sign that the healthiest consumer lending environment on record in the US is coming to an end. That's why I said it's the canary in the coal mine, telling everybody as soon as interest rates start to rise, then we have a problem. The share of subprime credit cards and personal loans that are at least 60 days late is rising faster than normal. And in fact, in March, those delinquencies rose month over month for the 8th time in a row. It's not one, I don't show you things. I always remove those. So I open up about, maybe 60 different tabs at any given moment. And I get rid of a lot of that, most of the details, because I'm here to save you time. I don't just show you if it's month over month increase. This is the 8th month in a row. That's a trend. And I'll show you some other trends in just a second. Existing home sales fell in April to the lowest level since the start of 2020, okay? You got to understand what's happening here. You got the consumer that's concerned and interest rates are rising. Big deal right now. And of course, initial jobless claims, which, by the way, were heading lower and lower and lower. But now that has flipped around. We are heading back to the average between 2014 and 2019. This 5-year average, we're almost there. So what does that tell us? That, okay, we're nowhere near what we saw earlier in 2020, of course, but it's starting to pick up. This is interesting. The job situation in the United States is very odd, to say the least. Age of scarcity begins with $1.6 trillion hit to the world economy. New fault lines are likely to outlast war and plague, leaving the global economy smaller and prices higher. If you see what's been happening, you look at one industry and they say, we have never seen this level of demand before. Other industries are saying we are completely broken and we are in big trouble. Like it's really, or some areas are saying like things are hot here, real estate's hot, and people are spending so much. I mean, it's just fantastic. And then others are saying we're seeing more crime, we're seeing more drugs, we're seeing businesses closing, the shops are not doing well. I mean, it's unbelievable. And it's not where you would necessarily expect. Okay, this is just showing us some charts along with that. I really need to show you what's happening with the UK. UK inflation hits a 40-year high of 9%. And that's, of course, we know that these measurements are never accurate. Okay, it's always much higher. But anyway, their measurement, 9% as cost of food and energy soars. Headline, CPI fueled by increase in household bills and rising transport costs. The same situation all over the place. Europe car sales slumped 20% in April, dashing hopes for a recovery all across the board. All across the board. The same thing over and over and over and over again. I've been talking about this since 2020. I said to you specifically over and over again, watch what happens when the stimulus fades. Watch what happens. And people said, no, this is not going to happen. But it was so obvious. And I took a lot of heat from that. I really did. Look at what's happened to this channel. Look at it. Look at it. Anyway, China in talks with Russia to buy oil from these strategic reserves. The partnership between these two countries has strengthened. We have seen what happens with oil over this period of time. I mean, I can show you just real quick. Right now, as I record this video, it's $109 a barrel. This has been all over the place. But certainly we are elevated beyond what we had seen before. Not the highest ever, but certainly it is elevated right now. China doing business with Russia. Russia doesn't really seem to be losing out in a lot of different ways. You saw what happened with Europe. Europe literally said, we are going to punish Russia. We're going to make sure that we don't buy anything from Russia anymore. That's going to happen. And right away, the reaction was very strong. And literally days later, they came out and said, okay, if you want to buy Russian oil, this is the way you do it. Because they know it's all talk. They can't wean off of it. It was designed to be this way. That's the way they made this happen. Anyway, most CEOs are bracing for a recession. So you see what has happened. You look at this, and CEOs are in that space right now. You see it all over the place. 68% of CEOs expect that the Fed's war on inflation will eventually trigger a recession. Why? Are they gurus? No. It's because it happens all the time. You increase interest rates, you are going to cause a recession. Look, this was back. Okay, let me show you this one first. This is October 11th, 2021. Goldman and JP Morgan say buy the dip as inflation is transitory. Let me reread that just because it's really funny. Goldman and JP Morgan say buy the dip as inflation is transitory. They said that in October of 2021. Now it's understood. No, it's not transitory at all. What about this? This is May 2022. Goldman and JP Morgan strategists see recession fears as overblown. Are we going to believe these two groups? Did we believe them in 2021? No. Are we going to believe them in 2022? That's up to you. That's up to you right now, okay? Wells Fargo CEO warns US it's going to be hard to avoid some kind of recession. We're seeing this across the board. Whether it's Wells Fargo, whether it's anybody else, it doesn't matter because the signs are all there. The information's all there. The data is present for us. And your friend at the Federal Reserve, Jerome Powell, he was asked this question. This is an interview that I had showed you recently that he did. Did you blow it? This is what he was asked. Did you blow it in being late and failing to recognize that inflation was going to stick around? He basically repeated something that he has said over and over again, and that is essentially, at the time, going by the information that they use, we did the right thing. However, looking back, we should have started increasing a little bit earlier. That's what he said. And I think it's pretty obvious. But the funny part was, remember what they said. What we're doing isn't causing any inflation. It's not causing that. So don't look at these two things together. And all of those in the media reported that. But then you look at it today, they're saying, okay, we have to act. So what was all that talk back then? And all the YouTubers, I'll call you out every day. You lied. If you were propagating that information, you are a liar. And I think that calls for an apology to your audiences. Fed to plow ahead on half-point hikes, undeterred by stock slump. I'm looking at all the different members of the Fed. They're saying the same thing. This is the direction they are heading. In June, we're going to get another meeting, another 50 basis points most likely. They're hinting at 75. I don't see that happening. 50 basis points. Are we going to hit 1.5%? That's going to be significant. And then a month later, I believe in July, there's another meeting, which would mean 2% Fed funds rate as of July. Can you believe it? I mean, it seems so hard to believe, but just a couple months away. Good thing I don't drink a lot. $18 beers and $16 salads await fans at the 2022 PGA Championship. Is it inflation? Is it price gouging? You know, call it what you want. I mean, that beer right there, 19. I don't know what beer costs, but it seems very excessive. I mean, obviously, you go to one of these events, they're always going to overcharge you. But I just think that we are seeing the inflation everywhere, because I'm sure, like, their input costs have gone higher. So they just say, all right, hey, everybody's used to all this nonsense. Anyway, let me know what you think about that. I'm just interested. Griffin Citadel nears tipping point on Chicago exit over crime. Patience is wearing thin. And what we see here right now is something that's happening all around. I'm seeing the same thing, not just in Chicago. I'm seeing it in San Francisco. I'm seeing it, I mean, everywhere. Toronto. I've been hearing so many reports in Toronto of cars, people, like, literally, a guy walks up to a house in a nice neighborhood and says, "Give me the keys to your car," like right on the person's driveway. "Give me the keys to your car." And that's it. Here's the keys. And they drive off and it's gone. Just like that. Because why? Why is this happening? There is no punishment. What's happening in San Francisco? Guys go into the store, they just grab a whole bunch of stuff and walk out because there is no punishment. At the same time, the second level of that is that we do not have prosperity. Prices of everything are rising. No prosperity, you will get increased crime. It's a simple matter of fact. You stayed until the end. Right now, I wanted to tell everybody, reverse repo party. Right now, get ready for it. $1.98 trillion. When we hit 2 trillion, I'm going to do a reverse repo party. Refer to the blog post, or community section of my YouTube channel, as well as my Twitter, and you will see more information about that. You stayed until the end. What's this all about? What the heck is this guy talking about? He's just ranting and rambling. Does anything make sense? This is it. Number one, the consumer is being hurt. We know that. There are many different indicators of that. You can see the debt levels are increasing. The consumer is taking a step back. You can see that the purchases are being affected by this. Companies like Walmart, Target, Costco, and others are saying that. It is very clear. Okay, and then we see it's also reflected in the stock prices too. 3, stocks have dropped. I don't need to tell you any more than that. Number 4, investors are parking cash. So we can see that the fund manager survey by Bank of America is indicating that, but we also see it all over the place. Even retail investors have sold off some of their stocks and they're parking cash. Still, historically, I would consider it to be low, but more cash than money being put into different funds and so on. And certain future, I believe personally, will be determined soon. If they continue with the rate hikes, if you can see the balance sheet runoff that's supposed to happen, I believe it's June, if that actually does take place, the markets won't like this, but we can see what happens. Is the market going to be okay with a little bit more if they believe in the near future they're going to stop this? Or is it just we'll keep going? I think that's going to be understood in the coming months. So we'll have to see it. Keep an eye on that. If you found this information good for you, hit the thumbs up. Okay, this is how we are able to do this, by actively daily looking into it every single day. You will not see this information anywhere else because I am looking through the weeds. I am getting this information to you as best I can. Hit that subscribe button. It's right down below. I'm on Twitter every single day. I'm giving you information there that I do not give on the channel. So follow me there. TikTok, Instagram, wherever you can find any social media, I'm there. Not doing any dances, let me tell you, but I'm on all these platforms trying to get the word out. See you on the next one. Take care.